Welcome to Finance Deep Dive. You see this number in the news all the time, the US trade deficit. It's this massive figure that gets thrown around constantly. But what does it actually mean? Is it good? Is it bad? Well, today we're going to break it all down. So, the first thing that probably pops into your head is that sounds bad, right? A deficit? It sounds like we're losing, like the country's failing economically. But is that really the whole story? Well, as you're about to see, the reality is way more complicated, and honestly, a whole lot more fascinating. All right, first things first, let's jump right in and tackle that big misconception. But before we can bust the myth, we all need to be on the same page about what a trade deficit even is. Okay, so at its most basic level, it's really just simple arithmetic. A trade deficit just means a country's buying more stuff from other countries than it's selling to them. Think of it this way. Imports are greater than exports. And for the United States, this isn't some new trend. This has been the reality for decades now. Okay, so if it's not just a big red flag that says we're losing, then what's really going on? What's actually driving this thing? Well, it's not just one single culprit. It's actually a mix of some really powerful economic forces working together. And believe it or not, it all starts right here at home. The single biggest driver is, well, it's us, American consumers. We love to buy things. A lot of things. I mean, our entire economy is built on consumer spending. And here's how that plays out step by step. When the US economy is humming along, people have more money in their pockets. What do? They spend it. And a huge chunk of that spending goes towards goods made in other countries. So here's the crazy part, the paradox. A stronger US economy often leads to a bigger trade deficit. Kind of counterintuitive, right? But our spending habits are only part of the story. There's another huge piece to this puzzle, and it has to do with something uniquely American, the dollar. The US dollar literally has its own economic superpower. See, the US dollar is what's known as the world's primary reserve currency. What does that mean? It means pretty much every country out there needs dollars to do business. To buy oil, to trade with each other, you name it. They even stash away dollars in their central banks for a rainy day. All of this creates this massive, constant demand for dollars, which keeps its value strong. And that strong dollar, it's a classic double-edged sword. On one side, it's fantastic for us as consumers. It means all the stuff we import, your phone, your car, your clothes, is cheaper. But there's always a but, right? The flip side is that it makes our exports, the stuff we make here and sell to other countries, more expensive for them to buy. So what happens? We buy more from them, they buy less from us. And boom, the trade deficit gets wider. Okay, so this is where things get really interesting, because up until now, we've only been looking at one side of the equation. The trade deficit is not the whole story, not even close. It has a mirror image, and that's the capital account. So let's stop and think for a second. We're sending hundreds of billions, even trillions of dollars overseas to pay for all this imported stuff. Where does all that money go? It doesn't just disappear into a black hole, right? Nope. The answer is actually pretty simple. All those dollars, they come flowing right back into the United States. Why? Because the companies and countries that get paid in dollars don't just want to let them sit in a bank account. They want to invest that money and make a return. And this right here is the absolute key to understanding the whole thing. The trade deficit, where goods and services flow into the US, is perfectly balanced by what's called a capital surplus, where money and investment also flows in. We buy their products, they buy our assets, things like stocks and bonds. They are literally two sides of the very same coin. One cannot exist without the other. So what kind of assets are they buying? Well, all sorts. They're investing right back into the US economy. They buy U.S. Treasury bonds, which helps fund our government. They invest in the U.S. stock market. They buy real estate. They even start or fund businesses right here. This constant flood of foreign investment is a huge reason why our interest rates stay relatively low. All right, so it's obviously not a simple story of good or bad. But, and this is a big but, that doesn't mean it's harmless. The trade deficit has very real impacts, and it creates clear trade-offs. There are definitely winners and losers. So who benefits? Well, pretty much every consumer in America. We get access to a huge variety of products at lower prices than we'd otherwise pay. But who gets challenged? It's often workers in specific domestic industries, especially manufacturing. They're facing tough competition from cheaper imports, and that can unfortunately lead to job losses and put a squeeze on their wages. And this gets to a really critical point. It shows why simple solutions, like just slapping tariffs on everything, often don't work the way people think they will. The trade deficit isn't really about a specific trade deal being bad. It's driven by these massive structural forces, our own spending habits, and the global power of the dollar. It's like trying to fix a hurricane with a band-aid.
So let's pull it all together. What have we learned? The trade deficit isn't some simple scorecard that says our economy is failing. Far from it. In many ways, it's a direct reflection of America's unique role in the world. It reflects our powerful consumer market, the dollar's status as the king of currencies, and the fact that we are the world's most attractive place to invest capital.
Which leads us to the big final question. Is the U.S. trade deficit a bug, or is it a feature? Is it a fundamental flaw in the global economy that we need to fix? Or is it just a necessary part of a system that is literally built on American consumers buying things and the whole world using the US dollar? How you answer that question really says a lot about how you view the global economy.
If you like the content, don't forget to subscribe to Finance Deep Dive. It motivates us to keep posting.